You ever enter a swing trade, feel confident, then 2 days later you're doubting everything, staring at the screen and checking your phone, thinking about cutting it early? Yeah, that's the psychological war of swing trading. And it's not just about the setup, it's about how you handle time, uncertainty, and more importantly, yourself. After years of trading, wins, losses, tons of frustrations, I've learned that mastering your own psychology is just as important as mastering your chart setups. Today, I want to break down the psychological traps swing traders fall into, and more importantly, how to actually develop the mindset needed to trade with clarity and ultimately confidence. First, let's talk about the psychological traps. The first trap is the too much time to think problem. When you're holding for days or weeks, it gives your brain time to second guess everything. You overanalyze news, price movement, or even someone else's opinion on Twitter. You go to bed checking charts, lose sleep over trades gone wrong in your dreams, and check your position first thing in the morning when you wake up and realize how much money you have on the line. The second psychological trap is the "I almost hit my target" panic. Watching a trade almost hit your take profit, then pull back, can really mess with your head. It creates this cycle of FOMO and fear of giving back unrealized gains. It's in this state that you can easily make irrational decisions like closing the trade, moving stop losses, and take profit levels, just because you think something else is now going to happen. The third psychological trap is the attachment to every trade. Because you're now in trades longer, you naturally get more emotionally attached. One trade starts to feel like a reflection of your worth as a trader, and that can be dangerous. Not to mention, you are likely trading with larger size to combat the lower trading frequency. You could be sitting in a trade for crude oil thinking that things will sell off based on your strategy, and next thing you know, you convince yourself and everyone you know that it's going lower, only to have one missile fired overseas blow out your stop loss in minutes. I'm not speaking from experience, of course. The fourth psychological trap is impatience versus overconfidence. You're either micromanaging the position and closing early, or blindly confident and ignoring red flags. It's a weird swing between anxiety and ego, but all too common for swing traders. Things are going well for some time, then things aren't, and the world looks like it's ending. I'm sure a lot of us can relate to these traps in our own experiences, but how do we stop them from sucking us in like quicksand? Well, there's a couple things we can do. But first, a quick word from the sponsor of today's video, Ironbeam.
Welcome to Ironbeam, the future of futures trading. With our cutting-edge chart trading feature and 300 plus indicators, you can now trade directly off the chart anytime, anywhere. Delivering seamless trading across all platforms, the Ironbeam journey is supported by 24-hour trader support, low day trade margins, and no account minimums. Ironbeam brings the future into the present. Join now and augment your trading experience.
Okay, think of these as psychological shifts we can make. Keep note of these for next time you're sinking into one of the traps we just mentioned. First, detach from the outcome and attach to the process. It's easier said than done, but focus on following your strategy with discipline. If the setup checks your boxes, take the trade and just let the probabilities play out. Nothing else actually matters. This trade versus that trade is really irrelevant. It's the whole body of work. It's the tens, hundreds of trades that you take that ultimately make or break you, not this one or that one. Number two, use time to your advantage, not against you. Instead of watching the chart all day, zoom out. Check in at planned times, maybe the open, the close, or at key levels. Set alerts and move on with your day. There's nothing more for you to do. Over time, you can make adjustments if you notice that checking at certain times is better for you. But at the end of the day, when you entered the trade, you planned to lose a certain amount of money, didn't you? Number three, journal your thoughts, not just your trades. Capture the emotions you're feeling during the trade. Emotions are not the enemy. The way you deal with them and how it impacts your trading could be. Over time, you'll start to see patterns in how your psychology affects your decisions and whether it's actually helping or hurting your bottom line. Number four, normalize imperfection. Not every trade will be perfect. You'll miss tops, bottoms, and sometimes get shaken out. That's part of the game. Don't turn it into a moral failure. In fact, some of the best traders historically miss huge moves. It's just that they collect way more money than they lose, and they keep doing it over very long periods of time. Would you rather be consistently imperfect but profitable, or inconsistently perfect and not profitable? Number five, trade small enough to think clearly. If you're too emotionally tied to the trade, you're probably oversized. Dial it back until you can actually think logically while in a position. There is a balance here and there is no need to rush. One thing I like to say is you got time, and I legitimately mean it. I mean, think about it. If you're trading super small now, but building the habits and the proof that you are profitable, it will get easier and easier to scale up over time, even if it takes years and years to do. Eventually, you'll be trading with a size never imagined in your wildest dreams. Just one step at a time, the compound effect is pretty cool, you know. Let me give you a quick example. A while back, I had a swing trade setup on NVDA. Perfect setup, clean break, volume coming in. I entered, and within hours, I was up 3%. Things turned around by the close, and while my stop loss had yet to trigger, I panicked. I saw some red candles and closed for a 2% loss early. 2 days later, the trade hit my original target and never would have hit my original planned stop. That trade wasn't a technical mistake, it was psychological. I didn't trust the plan. I reacted to the noise and let my mind fall for something that only it created. That's when I started journaling my emotions and really asking myself why, and setting check-in times, not just price alerts. If you're struggling with the mental side of swing trading, it's probably not your strategy. It's your psychology. And that's good news because it means you can fix it without reinventing everything. Spend some time to attempt to master your mindset and you'll unlock way more consistency. If this video helped, drop a like down below. Let me know your biggest psychological challenge in the comments. I'll also link a video up here on the screen that does a deep dive into trading psychology. It's one of my favorites. Peace.